All right, let's jump into it. 11:26 on 27th of May. Can pretty much sort of fly through the news because yesterday, of course, we had some bank holidays in UK and also US. I think it's like Memorial Day or something in the US, and I'm not even sure what it was over in UK. Some basically spring bank holiday. Okay, whatever. Anyway, it was pretty, yeah, lackluster overnight, and we saw basically a little bit of a sort of a drift down and the sort of correction of what we sort of saw through Asia. But yeah, nothing sort of majorly of note. Um, in terms of data and news and that today, again, it's looking pretty quiet. Absolutely nothing sort of through Asia after Ueda sort of spoke earlier. Haven't really sort of seen a great deal of sort of reaction or any sort of comments with this so far. Nothing that's really affected the market so much. We've got CPI from BOJ later on, so coming in a little bit of a tick up there. Could potentially, obviously, sort of give a little bit of a push to the yen on that. I don't think that's really going to be something that affects DXY so much. Obviously, sort of if you do get a bit of a push on JPY, then it could affect it a little bit. But I don't. I think that'll be fairly sort of restricted just to its or confined to the JPY crosses. So not really so much of a issue with that across the board, at least with what I trade. Tonight we got this Governor Hauser, sort of speaking again. Last week he did speak. Aussie took a little bit of a bath on that. It was also around the same time that we had a little bit of a push on US dollar across the market. DXY sort of pushed up a little bit there, so you can't really sort of say directly so much how much his comments were the driver, or whether it just happened to come at the same time with it all. But something to sort of keep an eye on 6 o'clock tonight. Apart from that, not really a great deal going on. We've got durable goods orders coming out from the US, and that's about it. Tomorrow, of course, CPI looking to sort of tick down just a little scratch on Aussie there, but we'll sort of get to that tomorrow because that could be seeing some sort of like basically, obviously, sort of with inflation coming down, it'd be sort of dollar positive, well, Aussie dollar positive. So you might see some sort of positioning for this today. Aussie is sort of it's been sort of sold down from yesterday's open, where it sort of spiked up into the 65s again. But I'll get to that when I get to the charts. As I said, durable goods tonight. We are looking for a little bit of a sort of a tick down, and this is what I've been saying. A little bit of a pattern with these expectations are sort of almost inverse in that. So the headline obviously ticking down there. It's been revised down. Wow, from 9.2 to 7.5. Wow, actually, this is I missed that this is actually sort of a positive number, and then this is a negative number. So I was like, 7.5 to 7.6. That's actually a huge drop off. Um, to go from 7.5 to negative 7.6, I'll have to double check this on something else, make sure this is sort of correct. But that's like a 15% drop, or thereabouts, I suppose. But yeah, so that's actually quite a big sort of expectation there. And look, in all fairness, we're seeing it still with the US dollar. It's just being sold off. Every chance it has a little bit of a bounce, just being sort of smashed straight into. So again, this is not painting the rosiest picture for US dollar and DXY pretty much as a whole. So in terms of data, that's about it. So we can jump onto the charts. Look, because we are on DXY, I'll go through DXY first. We did sort of see a little bit of a bounce yesterday from the 78% retracement. So, obviously moved back up, came up here, tested this kind of area where we've got some sort of previous buy levels of this sort of structure, and it's just not getting much at all and gets sold straight into. So we're in a little bit of an interesting point just here because obviously sort of like, with the sort of three move structure that we do, we go down, we find support, we find resistance, we come test those lows, break through, cycle starts again. And this is the same sort of thing where we're at the moment. We've gone down, we've found support, we've come up, we've found resistance. This is the leg we're in. So this is interesting because obviously we found support off this sort of 78%, which is a justifiable reason. And DXY at these lows, it is very common for it to have quite deep, significant pullbacks, which then can still see a base sort of form and sort of see some sort of growth. So really at the moment, we're coming down, we're testing those lows. We've actually just done a little body fill here. As you can see, line across there, that's your body fill. And as you can see, markets come in, it's filled that, and it's trying to do a little bit of a bounce. 11:30, I suppose. So we'll see how this goes. But obviously, look, if it can hold around this area here, then we could be in for a little bit of a range at the bottom, or potentially a double bottom, which then would put the pressure or the emphasis back on this top side here to sort of see if it could get a bit of a pushback up to the top side. So if we did see this as a bit of a double bottom, you take your bottom into the top up here, and that's kind of where you'd be looking, which would take you, of course, back up around 99.4, which would take you up and sort of retest this previous support area down here. So two things. One, doesn't mean that this is actually going to happen. The other alternative is that this breaks through here, and then we start the cycle again, but just at this range here. This support then becomes the resistance, that becomes the level to beat. So we are in a little bit of an interesting point here to sort of see if they're going to be able to hold it or not. They are just selling this thing at all costs. Like it's honestly, I'm surprised that it's just been so incredibly bashed. Like it's had its little moments of running and that, and then of course hit this technical area up here, and we're thinking, okay, it's going to rally, no, going to rally, no, going to rally, no. But I did say 100 was the level that I did want to see it hold. I said, look, 100, if I wouldn't want to see it much under 100. And obviously we broke through, and this is a perfect example. Support, broke through, cycle starts again, support becomes the resistance, and we move down, and so on and so on. Look, these moves won't last forever. Has to be some sort of level of, okay, this is where market's going to see some sort of value in it. Finding that spot, that's where the difficulty is. And as I said, I'm very surprised that this has actually still just been absolutely hammered into at all costs. So at the moment in the immediate, these are the kind of levels that I'm looking for. A little zone through here, and then of course back up above there, and that of course gives us a like little double bottom and little potential breakout. Well, breakout, little measured move target would be back up above 99.4. But first things first, this is on the 4 hour. So I put it down into something a little bit smaller we could trade with, the 1 hour. As you can see, they opened and just sold it down. If it can hold around here, then obviously you might sort of need this to hold for another hour or so through Asia. And then you can start to see drift up. But I think the two plays here are either this or a drift back up over here. And then from there, you've either got a range or you've got this kind of covers both sides. I get this of this whole like, oh, hold on, sort of like, could go down, could go up. That's great. But the point is, it needs to hold this zone here. We can see that the market sort of held it here second time and gave it a bit of a push up through the second part of yesterday. But what you need to do, you need to see buyers go, yep, okay, this is a level in which I'm happy to sort of participate. I'm happy to hold this, buy and hold this level here. If we do see this to push back up, the emphasis is then on, as I said, these previous highs at 99. You break through 99, you look for your measured move, double top, double bottom measured move, takes you back up to 99.4. If we move back up and the sellers step back in here again, then we're really just looking at a range at these lows here. And, then the emphasis is back on the downside moves over here. With lack of sort of any sort of data and news, it's a little bit hard to get a read as to what they're actually going to do with this here. But I think sort of first things first, the buyers need to sort of hold this 98.7-ish kind of area, this 78% retracement that we saw. All right, move along. We've got gold. Should I put it onto a little bit of a clean chart? So this is obviously the one that I've been sort of tracking this. So it's above 32.70, 33.70 up into this little area over here, 33.60, 33.70. came up here, clipped it perfectly, and we've just been selling down since. Obviously, from the start of this session, we're coming down here. So obviously, to do these things on a few different charts, this one's a little bit cleaner for it all. Put this on the 4 hour, might show a little bit more. So this is the horizontal that we had. We also had confluence of the sort of falling resistance, and I've taken it off now, but this is actually the 78% retracement of this drop down here, as you can see. So here's the line here, and 78%, give or take a buck or whatever. So there was a fairly strong sort of confluence with this lot coming up here. We did get the sell down rejection, and it moved quite well. If we get onto a lower time frame though, actually let's get rid of this just to clean it up. Onto a lower time frame, we can see this sort of little trend that's sort of been setting up, and it's been respecting this thing quite well, or actually very well, because we sort of saw it come down here. So I was talking to my father yesterday, I was saying, look, 20s, that was the target for the session. So it came down here, and where we go 23 or so, which you can see on a lower sort of time frame that we've got a little zone through here. So you can see the horizontal where the buyers have sort of held this on the way up. It's also confluence of this rising support. They came in here and they've just grinded it back up the top side here. We've now come through that. So I think this is quite significant here, because you got to look at these things. It's the same sort of thing that we look at, like I said, with the DXY, and you're looking at that structure where you've got the 3 moves. So you put in a high, resistance, back, find support, you tackle the high, break through, cycle starts again. Find resistance, come back, find support. This one is the 3rd leg here. And this is why this is quite significant now, because this move here has given us a lower high. And when you put this in conjunction with a few things, you say, okay, well, it's a lower high. It's now breaking the trend. If it breaks this horizontal, then that's going to sort of confirm a deeper sort of pullback here. So let's put this one here. That's your kind of move. Direction. So underneath yesterday's lows, so 33.23, you've got a lower high, break of trend, break of horizontal, coming down off a strong confluence of resistance. You can expect a deeper sort of pullback. And then we can sort of look, okay, where are we, whoops, not that one, where are we kind of looking for there? Bring this down over here. We say, look, this is a fairly decent little target, which is back down the 32.80s. And of course, this was the level that we were looking at on the way up, saying that it had to hold this 80s level, which it did, and then springboard it up there. So there you kind of levels or your little trade. If you get down underneath 32.80, well, I think, you're coming back down, 32.40s you're looking at, which is kind of like that big breakout level where we saw that big lot of sort of buying come in, where it kind of took off sort of up through that area there. So there are your levels to watch on the way down, sort of that 33.20s and then sort of 32.80s. But for me, the fact that it's got the lower high through the trend off the resistance, I think this is definitely coming down a little bit lower. And you can see what happened when it happened up here. Very bullish. So this little leg here, very similar to this leg here, pulled back, moved up, gave us our lower high, which is this lower high here, and then breaking through that little support, where it first came down and bounced, broke through that, and away it went. So, it won't go down in one candle, but this is how these things sort of start. And, this will come in line. As I said, if we see US dollar, DXY sort of hold this support, that's going to give us some option for this to sort of come down a little bit lower as well. So still looking on the short side with gold here. So as you can see, they're the kind of levels that makes it a little bit cleaner to sort of come back down. Now, once you get down to 32.40, well, there will sort of, we'll work with that when we get there. But at the moment, that's looking like it wants to come back down a little bit. Silver, Still unable to break through this zone. We know this is a strong zone, as I said, marked it out here, sort of saying, hey, look, if you get above it, it's going to be a strong zone to hold. This is not looking like it wants to go through right now. Let's sort of drag this down here, and we've got a nice little kind of triangle almost. I don't, well, actually, not a nice looking triangle, it's an ugly looking triangle. I like symmetrical ones of these. Underneath 33.20, you know, you're looking down to 33, so on and so on coming down there. But for me, this is a strong resistance area. We've seen it be a big player with the market previously, being supports, being resistance. This is one tap, two taps, three taps into it with all lower highs. This is looking like it wants to come down here a little bit. I'll just flick back onto DXY very quickly because we're seeing this thing rally off the support area. So this is what we were kind of looking for the buyers to step in at this zone. And as you can see, as we're watching it, they're buying this thing up right now. Gold's sort of coming down a little bit. Silver obviously getting a little bit of a whack off that stuff as well. That's why it's important to really sort of like, you know, look at these charts and find those things that sort of work together, because, you know, that's where the opportunity lies. You know, it's not sort of looking at just one chart and going, oh, this is going up, because things will sort of fake out and things will sort of, you know, move sort of independently of others. But if you can pick out sort of when things are moving when kind of they shouldn't be, that's what will sort of provide you with a little bit of opportunity. Let's flip across. We got Aussie. Aussie made a big effort yesterday to get right back up into those 65s. Now, it's very interesting that that it again was unable to hold up here. Um, you kind of think how many chances are they going to give this thing? Because you know it's been a long, like 5, 6 weeks or so, kind of really just sideways. A couple attempts. This is to get above 65, maybe up around 65, 65, 65 on the dot. Bang, took out all those highs yesterday. Like we're talking going back to, was this November? So this is election fills, because of course that was actually no. Hold on, wait. Where's the election? Election was start of the month, wasn't it? This is the election. Yeah, this incredible price action where it rallied 127%. That was the election day. This smackdown, and then Aussie outperformed everything and did look at this a little bit like 127% or something. I think it was. Yeah, the 127 sort of retracement of that move of the election outperformed everything, and then just got hammered after that. Anyway, that's why it's always fun to be able to just remember these charts straight away. But point being is that we're seeing like 5 month highs with Aussie. It got right up there, and again unable to hold it. I'm still being pushed to my limits, uh, but looking for a US dollar sort of rally to push this thing back down. To me, it just doesn't seem right. You got the RBA pretty dovish, very dovish, and also I suppose you got CPI tomorrow, so that could be balancing out a little bit. China is coming down to it's just having a quick look on another chart here. So a three drive I mentioned over the weekend, a three drive from the lows. So that's potentially sort of looking like we might want to sort of push off the lows here, which be pushing Aussie down a little bit. And then US dollar has been pushing it up. And this is the driver. It doesn't matter because like this one, as you can see, it's a very crude sort of way of doing it. US dollar is the main driver. If they buy US dollar, it doesn't really matter so much what's going on with the local thing. We're still going to, Aussie is still going to be affected more drastically from the US dollar movement than what's going on with China and RBA. The RBA, if the RBA is hawkish, if the if the RBA is dovish, well, it doesn't matter. Whatever you want with the analogy in that. Like in this case, okay, so the RBA is pushing it down, so they're dovish. Say China's sort of selling off, so you know stronger yuan, so it's pushing Aussie down there. But then they're buying US dollar, Well, it just balances it out. And this is really what we've been seeing through this whole period over here. That, you know what I mean? It's not three ticks in one direction. So we're not seeing this thing really sort of take off, and it's not really giving away any clues. But what I'm sort of saying is if the RBA remains dovish, that pushes Aussie down. If the yuan starts to weaken, that pushes Aussie down. And if they start to rally DXY, that's to me is what we're looking for to get down to sub 62. Um, I mean, there's only so many times they'll give it a shot up the top over here. If it doesn't hold, they're going to push it back down over here. So at the moment, it's tried to break out, unable to hold it, knock back down. It's in a failed breakdown. So take out the lows here at 78. We'll see a little bit of a drop down. You could see sort of this was the plan that, when we came back down here, obviously took off first. So I would say actually let's move this down because it's not just taking out the lows. Put it here underneath. Whoops, this alert here. Failed breakout underneath 60. We know 60s and 90s are a very reoccurring sort of level. It doesn't matter what cent you're in with Aussie. It's, whichever way it's going, the 90s and the 60s generally, more often than not, will provide a support resistance on its way cutting through it. Not sort of like, 50s and that I might just sort of cut straight through, but generally 90s and 60s always hold. And as you can see, this area here in the 60s was acting as a resistance. So you want to see that as it comes back down here, they just allow it to go back down through. I think if you get down through here, that's your move there. Yeah, you've got this sort of rising support, but this triangle's almost become obsolete if they don't respect the top side of it. You got some little horizontals here. So it's not going to cut down in one go, but I would say if it's back underneath 64.60, then you're kind of looking at a failed breakout. And how many times can this thing do a breakout attempt, 5-month high, and then break back down here? Because you got to think sort of this is their chance. If this was Stop City and they were just going to run this thing right back up to 67, they kind of would have latched onto it and gone here, but they didn't. And we're sort of pushing back down here. I will just flick back to DXY very quickly because we are seeing this. This is the importance of these, what I call the body fills. And as you can see, market stepped in exactly kind of where we sort of said, hey, this is where they need to step in, and they've given it a shot. Till you get back up above sort of 99, well, as I said when I was covering it, you could be in a range. This thing could obviously still even roll over and come back down here a little bit lower. But the point is, if you put this back onto the 4-hour, body fills are a great target for these levels. As you can see, the body fill here. Don't worry so much about the wicks because the wicks you can't really tell. Buy stepped in here, buy stepped in here. You're not 100% sure on a level. Body fills are a much better target, particularly if you're looking to take profits or get into positions. The body fill is where I like to what I like to play with. Anyway, back onto the Aussie. We have seen it sort of obviously back down under this zone. It's rejecting down now. First indicator underneath 80. Second indicator underneath 60. If it's underneath 60, I think we go much lower, back down towards 64 as the next sort of main target. Those metals are really getting smacked at the moment as well. I think we're seeing, yeah. All right, and on to copper. Copper, another one. Saw it sort of obviously take off very strong into the close of last week. And the big thing with this is obviously Trump sort of going on about the 50% tariffs. But for the for the life of me, I couldn't work out why a 50% potential tariff against EU would be, well, risk on. Let's pump up the manufacturing. Let's buy more copper. Let's run this thing up. So to me, it was just US dollar weakness that is driving these things because I can't fundamentally, maybe someone can help me out, but fundamentally, I can't see why a 50% potential tariff against the EU would create this incredible sort of, hey, let's go buy risk on. Same thing with Aussie. Why was Aussie running off a potential 50% tariff from the EU. I could see why gold did, but what we've seen is obviously he's come out afterwards with the headline and said, "Oh, actually, hold on, wait, I'm going to pause that," and that's why gold's kind of starting to come off of there a little bit. US dollar is starting to find a little bit of support, so we are seeing these things get sold into. Like, it's going to make a bit more sense. But again, look, this has been an incredible recovery. I really thought this thing was going to come back down over here first, but we've been in this little stink sideways patch for a period. This is blown out the top here. If you get back into it, same with the Aussie, I reckon you go lower. But yeah, I mean, look, it's a tough call at the moment because it's still moved out. It's moved out, and this is the area I'm interested in at sort of 4.79 to see what they do with it there. If they hold it for support here, well, okay, on with the show. As I said, DXY, we've got some little short-term targets, but we haven't got major low reversals. So if it's a major low, and we can see some big indicators sort of saying, hey, look, US dollar is about to rip up off the lows, then you're looking for these lower targets. But because US dollar's only got some sort of short-term targets, you still got to apply those short-term targets on these other products. So, you know what I mean? You look down at 4.79. You look down at top of this sort of little potential sort of range that it had going. Maybe it undoes this big candle move that we saw from Friday. 4.72. You don't look for the major levels down here till we have some more confirmation that US dollar is actually finding a major bottom. Once it finds a major bottom, then you look for these things to have deeper sort of pullbacks. And I think that same thing applies for Aussie as well. You know what I mean? It's nice to call these levels down here at 62, but till you see those major bottoms and you see US dollar running, then you look for your closer targets. This level here, this level here. That seems like it'll sort of work out depending on the time that it comes into it. But as I said, this rising support, this horizontal, 64.20, that gives you about 110 points off the highs. That's a fairly deep sort of pullback, which we've seen it doesn't mind doing. But it doesn't mean that necessarily we're going sub 62. So you need to get that confirmation that we're seeing those larger moves on US dollar to justify the balancing on these other products as well. And finally, just with the yuan, this is what we were going over the weekend, daily here. So this is the kind of 1, 2, 3 drive down. And we're seeing that obviously markets trying to sort of buy it up into this area here. Look, there's not a great deal you can say with the yuan. It's just been absolutely, kind of yuan's strength, to be honest, because that's what's driving this thing here. Not a massive fan of this line, but it does seem to come up pretty well. Again, look, I think this is the area that I want to see it back above 722. If you get back above 722, then we're going to see that's going to be the ideas that, Aussie's going to be coming down a little bit further. We're probably going to be seeing, obviously, a bit more pressure on gold, and US dollar DXY will kind of be moving at the same time there as well. But as it is at the moment, if you have a look at this move through here, obviously we put in 3 lows here. This is not particularly turning around. If this puts in a big candle up through here, this will turn the RSI up. And if you're looking at that on a bigger sort of scale, well, that's just had 3 lows down here. And that's a negative divergence through here. Try and keep this a little bit cleaner. So 3 drives, negative divergence, needs to push back up, first of all above this, but this is going to be worth putting an alert on. It's going to say medium-term falling. Yeah, so it's medium-term falling resistance. I think if you could push back above here, and then obviously you swing highs above 722, I think that could potentially see you, first thing is probably just close this gap. Second of all, get back above these highs, and that could be your start of your little recovery run here. I mean, this is all forward thinking. These things obviously very much in a sort of downward sort of trajectory. But as we're seeing at the moment here, this is your three drive down. Where'd that line go? Three drives down, negative divergence. Above this falling resistance, I think we'd open it up for a little bit of a push up to the top side. All right, and I think that's pretty much it. Look at gold silver ratio. Really, just this thing has just been snoozing, absolutely not doing anything at all. It did come up and obviously tip this sort of falling resistance here, but bang back into its box, and it's just grinding. Like this thing has just completely gone to sleep. Very, very ugly chart. Not really a great deal to say about this. Above these highs, you probably see a little bit of a push up over here. But at the moment, it's really just not giving away much at all. All right, that's it from me.